Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden secrets within corporate filings. And let me tell you, this AllianceBernstein's filing has some juicy secrets about how money really moves in the investment world. Get ready, because we're about to pull back the curtain on their 2025 performance, and it is not all sunshine and rainbows. Before we dive deep, make sure you are subscribed and have hit that notification bell, because you don't want to miss our breakdown of these complex financial documents. And hey, if you love digging into these kinds of insights, you should definitely join our Discord community. The link is in the description below. Alright, let's get this show on the road. AllianceBernstein, or AB as they call themselves, just dropped their annual report for 2025. Think of this as their yearly report card, but for a massive investment firm, they manage trillions of dollars for clients all over the world. And this report tells us how they did. So how much money are we talking about? As of the end of 2025, AB was managing a staggering $866.9 billion. That is almost $1 trillion, to put that in perspective. That is more money than some small countries have in their entire economy. And guess what? That was up almost 10% from the year before. That is a good sign, meaning more people trusted them with their money. However, it wasn't all smooth sailing. They experienced net outflows, meaning more money left their funds than came in, to the tune of $11.3 billion in 2025. That is a bit of a red flag, especially from their retail and institutional clients. It is like a popular restaurant suddenly seeing fewer customers walk in, even if the overall value of their bookings increased due to market gains. Now, how do these guys make money? Mostly through fees based on how much money they manage. For 2025, their total net revenues were $4.5 billion. That sounds like a lot, and it is, but it was only a slight increase of about 1.2% from the year before. This tells us that while they grew their overall assets, the fees they collected didn't increase much. Perhaps because new money came into lower fee products, or old money moved to lower fee options. And what about expenses? The biggest bite out of their revenue is always their people. Employee compensation and benefits ate up a whopping $1.79 billion in 2025. That is a lot of money, and it was actually slightly down from the year before, which is interesting. It seems they managed to control costs a bit, even with all the money they manage. The report mentions they are aiming to keep their adjusted employee compensation expense below 50% of their adjusted net revenues, and in 2025, they hit about 48.3%. That is a good sign of financial discipline. So after all the revenues and all the expenses, how much was left for the owners? Net income attributable to AB unit holders was down about 16.3% in 2025 compared to 2024, coming in at $982.5 million. That is a noticeable drop. The report blames it on lower gains from divestitures and contingent payment arrangements primarily, but also lower performance-based fees. It is like the company had a great year in 2024 from selling off some parts and getting lucky with some financial deals, and 2025 was more focused on the core business, which didn't perform quite as well in terms of those one-off gains. Now, let's talk about the people running the show. Mr. Seth Bernstein, the CEO, is a big player here. His total compensation in 2025 was over $15 million. That is a huge number, but most of it wasn't cash in hand, it was in the form of stock awards. This is a common practice in big companies designed to keep executives invested in the company's long-term success. If the company does well, and the stock price goes up, they benefit. If it does poorly, their payout is less. It is a way to tie their pay to the company's performance. Mr. Bernstein's salary was a modest $500,000, but his bonuses and stock awards pushed that number way up. Looking at their unvested awards as of the end of 2025, Mr. Bernstein had over $11 million in potential future value tied up in AB holding units. That is a significant stake, signaling a strong alignment with the company's long-term performance. But it is not all smooth sailing for AB. They face a lot of risks, and they freely admit it. One big one is market volatility. If the stock market crashes, the value of the money they manage goes down, and so do their fees. They explicitly mention the impact of inflation, rising interest rates, and geopolitical events like wars as major concerns. This is understandable. If the world economy is shaky, people are less likely to invest, and the money they do invest might lose value. Another risk they highlight is employee misconduct. In the financial world, a single rogue employee or a serious compliance failure can cause massive damage, not just financially but to their reputation. They're very aware of this, and they talk about robust controls and training to prevent it. It is like a bank saying they have strong vaults, but also need to trust their tellers not to walk away with the money. And then there is cybersecurity. In today's world, this is a top-tier concern for any company, especially one handling vast amounts of sensitive financial data. AB details their extensive information security program, mentioning multiple layers of defense and regular assessments. They are very focused on this, which is a good thing, but it is a constant battle against evolving threats. A successful hack could be devastating. Now, a really interesting part of their story is the Bernstein Research Services, or BRS, in April 2024. They formed a joint venture with Societe Generale, a big European bank. This meant AB deconsolidated the BRS business. What does that mean? It means they spun off that part of their business into a separate entity, and their direct revenue from it dropped to zero in 2025. They essentially sold off or contributed that piece. Initially, they owned a majority in one part and Societe Generale the other, but the story gets even more interesting. By January 2026, AB will own less than half of the combined venture. This is a strategic move to streamline operations and potentially exit that part of the business. It is a clear signal that they are focusing on their core strengths, which are managing money for institutions, individuals, and high net worth clients. So, what is my take on all this? AllianceBernstein is clearly a giant in the investment management world, with tons of assets under management and a strong presence across different client types. Their focus on private wealth management and alternatives is a smart move, as these areas often offer higher fees and can be more resilient to market swings. However, they are not immune to the risks of the financial world. Market volatility is a constant threat and the competitive landscape is fierce, especially with the rise of passive investing. Their move with Societe Generale suggests a strategic pivot, focusing on what they do best and potentially shedding non-core assets. The sheer amount of compensation paid to executives, while high, is common in this industry and tied to performance and retention. Their large stakes in the company through restricted units should, in theory, align management's interests with shareholders. Ultimately, AllianceBernstein is navigating a complex and dynamic financial landscape. They've got the scale and the expertise, but they also face significant headwinds from market conditions, competition, and regulatory changes. Their ability to adapt and continue delivering value to their clients will be key to their future success. What do you think about AllianceBernstein's performance and their strategic moves? Drop your thoughts in the comments below. If you found this deep dive valuable, please give this video a thumbs up. And don't forget to subscribe for more corporate deconstructions. And remember, our Discord community is where the real conversations happen, so join us there through the link in the description. Thanks for watching, and I'll see you in the next episode.